Good afternoon, evening almost from Trader72. Welcome back to my YouTube channel and welcome back to London, which is sunny today and rays. Isn't it nice to have a little bit of good sunshine and daytime again at 5 o'clock here, our local time? Amazing. I just dropped a latest video about Adobe's results, which is going to drop any minute now. So that's fantastic. I have had a bit of a delay and a bit of a day of it because I've had a power cut this morning. Our fuse box absolutely went. It was storming yesterday. Last night in London, it was raining. It was awful, and it was literally everywhere. Unfortunately, I woke up this morning and we had no electricity, so we had to wait for electricity. And no electricity means no internet. No internet means really you can't do anything. It's amazing how much we rely on that these days on broadband. So here I am. I decided to skip the morning show. We did the Adobe analysis about an hour ago, and now I am doing the evening diary show or recap of the week. Yes, indeed. Another week done and dusted. The weekend is upon us. I'm looking forward to a bit of a break. It's been exhausting this week, and the news, as you're sure would have felt with your stocks or shares or commodities or whatever you guys are buying into, it's been exciting, volatile to say the least, but that is the way the market goes. This is when you make most of your trades on a not massively volatile as it is now. But as we know, we've mentioned the VIX earlier on. The volatile VIX is at 26, which is well above its norm. So from that point of view, I think it's certainly been an exciting week going from there. So before I go on about my weekend, we can maybe find out what I'll be up to at the end of the show. But without further ado, let's start off with the show. Let's have a quick recap today. It looks like it's been a fairly flat day. Still concerns over the crude oil, WTI as well, in terms of it's still at the moment. Let's have a quick look before I start the headline. Currently, oil is at $101 a barrel. Wow, that is still high. As some of you may know, I bought in short. Brave old me. I'm not sure if I've done the right thing here. I was pretty convinced when I did it at the time. Currently, I bought at 92 and I'm currently about £150 down. It's not a huge amount. I bought a small amount really just to eventually, when oil and the whole conflict settles down, I would have thought oil will go back to some kind of normal number at that stage, possibly around settling, hopefully around the 75-80 mark. So still money to be made on that trade. Like I said, I don't normally do commodity trade, but I decided to do it that way. Anyway, I'm digressing into another whole area. So yeah, as you can see from the markets at the moment, US 30, which is the S&P 500, down about 100 points, and Nasdaq down 160. Really struggling to find any kind of direction for today. I think the couple of things that I've obviously to recap again while we're in the recap mode. As you all know, crude oil, conflict in the Middle East, the Strait of Hormuz being blocked, a couple of tankers attacked. It's been all action so far. Plus, we have got also, I did mention in my previous video, yesterday's evening diary, and I did explain as well about the credit market having a few issues with obviously privately credit companies that loan money to companies who have had to do a couple of write-downs on defaults of loans, including JP Morgan, Goldman Sachs recently as well, and they're refusing redemption, which means that they're refusing for people to either take their money out or lend any more money to anybody else. So there's been a bit of an issue with that at the moment. I think a little bit scare in a private credit market. So they've restricted withdrawals, which has led to banks marking down loans valuation, and it's been weighing on the financial market. And it has actually weighed on a few stocks. I think JP Morgan, Goldman Sachs are all down, including my S&P Global, for different reasons. But I think the financial situation, on top of the inflation being sticky and quite high, and obviously consumer spending potentially being affected by that, will affect the whole financial sector, whether you're a credit card, a banking system, or a credit rating, as S&P is. We've already discussed Adobe, so I'm not going to go into too much in terms of that side of it at the moment. But let's just recap quickly on the stocks. Obviously, Friday's news has been mixed. It's been flat. Nasdaq down, S&P down. Barrel still at $101 a barrel on the crude oil. We are now apparently that's the other bit of interesting news for some who may not know or may know. I've followed the news religiously, and I'm talking about deep news, not news that I'm hearing on TV. Particularly, Russian oil is being put back out onto the market. There's seemed to be some agreement there, so it looks like that is also been opened up to release some pressure on crude oil prices. So won't delve too much into that, but it looks like we're releasing 172 million barrels of oil from strategic petroleum reserves to keep the curb on skyrocketing oil prices. So the plan, obviously coordinated by the IEA this week, that released 400 million barrels, which initially kind of went down quite well, and then as soon as the strait was blocked and there was a new leader, dampened all of that, and the petroleum price went right back up from where I bought it initially at 92, where I felt there was a retreat from that good news. Took me by surprise because it went right back up to $100 a barrel. So that was the news there. So yeah, I mean, Iran's there's a new leader, which obviously has not helped the situation. It seems like the sun has taken over. The Americans are saying that they actually have injured him. I'm not sure if that's the case or not. Again, I'm not going to get into a political know-how on this. I am not an expert. I am certainly don't take any sides whatsoever. I'm here just to go on news to trade, obviously. So we'll see. So we'll see what happens. I mean, there's a lot of stuff going on in that strait. And it's amazing that small little strait where oil tanking, 20% of oil tankers go through of the world supply is being blocked, and it's causing absolute chaos. So it is quite amazing to think that somewhere in the world out there, way out there is a little strait that is causing such chaos. Amazing. But anyway, that is the way it is of the world at the moment. We live in a global world. So that is it. Now, interestingly, just to kind of finish off on the oil, because we've well established what's going on there at the moment, and I'm not going to waste too much more time on it. It looks like Goldman Sachs are predicting that it will be going from $100 a barrel in March to $85 a barrel in April. So if I wait long enough, who knows? I may get a chance of finally fulfilling my thesis on the fact that oil will be going down eventually. So I am keeping my short position, but I'll come back to that again in a bit, because I've got obviously a decision to make. Normally things tend to move over the weekend in a bad way for me. News like oil and anything that could go wrong, I can't do much about. And on the opening, I could get absolutely whacked. So I am aware of the situation of owning oil over the weekend, depending on geopolitical situations there. So big decision for me to make whether or not I halve my position down and play it a little bit safer, although I don't have that much, but enough to not hurt me too much on the opening on Monday. Could also be good news, who knows, but decision to make. And this is why I don't particularly like buying into commodities and I prefer to stick with stocks and shares. That was my decision, however. Now, PCE news. Now, before I go on about PCE, for some of you who don't know what that is, PCE news it's actually the Fed's best gauge to work out where inflation is and basing that on the interest rate. So it's closely deciding whether to raise or keep interest rates. So at this moment, PCE is basically spending on goods and services, everything from groceries, clothes, and healthcare and entertainment. That's purely down to that expenditure, so they can see what people's spending is and where the inflation is, going. So clearly, matters very much to the Feds, and that's one of the main gauges they look at this moment. So I just want to explain what actually PCE mean. It took me years to find out all these things out eventually, so I'm just giving you a little bit of information before we go on about it, blindly expecting that you guys might know about it. Some of you may obviously know, so good, good stuff there. So a high PCE means that Feds may increase rates, borrowing costs go up, can hurt stocks temporarily. A low PCE, stable or falling inflation, means that Fed may lower rates or pause hike. So that's what it is. So the headline came in at PCE 2.8%. Inflation came slightly below expectation. Inflation cooling down. Progress towards the 2%. And obviously, I've mentioned this before, the Feds would like inflation to be around the 2%. There's obviously was the other gauge that we checked yesterday, and it was at 2.7 for the CPI, which is a slightly different, and as we've gone through this yesterday, gauge that the Feds will look at as well. But the PCE is the one that they're mainly looking at. So lots of different connotation of what that might be. We don't have to go through all of this now, but at the moment that came in 2.8. I think the markets kind of liked it and initially went into the green on the back end of it, because obviously it means that potentially there might be a Fed cut coming a little bit quicker than expected. But that's, again, all in the future, and whether or not that will happen, I think we'll know more about it from the Feds next week. Other numbers there, I'm going through the numbers. Revision GDP, there was US GDP was revised to 0.7 versus 1.4, so meaning the economy is slowing down. That's understandable. And this is obviously all precursor to the Middle East conflict, so I would have thought that those numbers will be quite spiky or low, will affect those numbers eventually on the back end of the crude oil prices going up. So inflation's still sticky. So the rates, we're still looking at well above the rate of what the Feds want. So economic growth is slowing in the US, but they're still spending apparently. So we're looking at potentially so the market expectation is still 2 to 3 cuts for this year. Again, believe it or not, these cuts do affect the markets and where the markets will go, especially if you've got US stocks. So if you do own US stocks, please do keep an eye on those interest rate cuts and what will that mean, because there is constant betting from the market whether or not that will be happening or not. So that will depend obviously on oil prices, geopolitical risk and inflation trends. But at the moment, 2 to 3 cuts. And looking at June, July, although now rumors were after the CPI news yesterday, it might be September. So who knows? If we had a crystal ball, it'll be millionaires indeed on that one. So that's where we are. So oil shock. Biggest news is the $100 crude. We've gone through all this already. Inflation report wasn't too bad, but not good enough. Inflation is stalled at 3%. The markets, the PCE, we've gone through that already. So that gives you an idea of where we are at the moment. One other bit of news is, as well as Adobe last night, which I've gone through already in detail, so there's no point me going through that again now. Ulta Beauty, which is obviously quite a big, pretty big takeaway there, and companies in terms of that side of it, fell pretty badly, and we'll have a look at their chart in a minute. It looks like the company issued a weak outlook for 2026. I didn't look at the exact numbers, but I don't own the stock. I did look at the stock a few years ago, about a year ago. Very good company, great return, very expensive, which is why I never made a move, well above its intrinsic price. Although after this, it may well not be, so it might be worth a look at it. Huge conglomerate, Ulta Beauty, and a very, very good company in terms of what they do in terms of consumer spending. In terms of that, management warned that global economic uncertainty impacting spending. So obviously it's consumer health, so that gives you an idea of what people will be spending. And of course, if the economy slows, that could also be a problem for any retail company. So hence why retailing people that, if you buy into retail companies, be aware of the economy and what consumer spending will be. Goes for a lot of companies, of course, but specifically retailers. So just to finish off anyway, just kind of on the news bit, market themes of the week. So bullish factor, potential confirmation of stable inflation, tech leadership resilience, so the tech stocks. Obviously, the bearish factor, Fed cautious on rate cut, geopolitical impact by energy and risk assets, slower economic growth. So lots going on. Key focus for next week. Feds are meeting and commenting on the macro situation. Inflation prints versus market expectation. Oil prices and the job will obviously continue to next week. And tech earnings and AI sector signals. So next week, obviously, I'll give you a bit more of a recap on that. So let's have a quick look at Ultra Beauty for now. If I can find it, there we go. Ultra Beauty dropped 12% on the back end of that news. So that did hurt them tremendously. As you see, this is a weekly chart. It dropped from pretty much 647 to 548. So it's nearly 100 points. And as looking there, it's looking like it's going to pretty much go into potential oversold on the Stoich and on the MACD, looking very like heavy selling of that heavy teeth there, and obviously the crossover. So still above the 200-day moving average, which is a big signal. Obviously, the money that falls below that, then you're probably looking at a further fall. If it does bounce off that, then you could be looking at a rebound around the about the 430, 440 mark. Probably worth putting an alarm on that stock, maybe around that mark, to see if it might bounce. That would be my advice. Again, please do look into the company, because it's not just about the stock price, but it's also about the story behind the company. These two need to be put together to actually give you an idea, an overall idea of when to invest. So what I mean by the story, the background, the company, what it does, what it earns, and then marry that with what is it really valued at. And I will go on about it again, but down to the intrinsic price of the stock price, and what discount you'll get off that price. At this moment, I still think it's overvalued and probably not worth going for on my end. But obviously for you guys, that might be the perfect stock to go for if you do your own due diligence and your own research. So that's Ultra Beauty, and we'll put that on the alarm watch for now. I may even do that right now for you. Create a new alarm and then put it into my alarm list. Now, moving on to back to any other news. In fact, obviously, Meta slightly down today as well. AI model avocado rollout. I'm not sure what that's about. I'll need to kind of work out more. But again, a choppy market down to crude oil, Middle East tension. That is the main takeaway of that. Now, in terms of the rest of it, in terms of my share price, my portfolio itself, at the moment, we are looking at S&P Global. Not great, if I'm honest, at 421. Has fallen back from maybe the 450 mark last week. So it has struggled this week, but I think that's due to the political tension and being in the financial sector. Both Visa and S&P have seriously struggled, but it looks like they're holding on with dear life at the moment to keep there. As you probably know, this week, my major takeaway this week would be that I've added my position to S&P Global. I bought a second position at 421, and I did another £4,000 worth of shares with another deposit of £600. So my position on S&P Global now is jumped to number one with 8,500 shares, followed by Adobe at 7.6. Crude oil, obviously, I've got a very small position, which is costing me money at the moment. But patience is always all about patience, apparently, I've been told. So we have to be patient. Visa, very reasonably down, only about 60 quid at 308. Again, bought a small amount of 3,000 shares. Only a deposit of £616. So quite a big deposit I've put from my money that I have on the side. 69 is coming up to nearly £1,700 in deposit money to buy myself £8,000 worth of shares. That's 20% down on the amount of shares lent to me by my platform, which I'm all renameless for now. So yeah, I mean, as we can see there, 182 down, 122 and 57. Obviously, the 2.5 by Adobe. That's for my previous mistake I made when I first started, when I didn't buy the price at the right time, and that's exactly why I want you guys to learn from my mistakes. As I said, no BS on this show. It's transparent. That is the whole point of me teaching you guys my mistakes and what I've done and what my thoughts are for what they're worth. I'm not a financial advisor. Please do not take me literally. I'm here just to give you my advice on how I work and how I do things and how I've learned to become a small retail investor. And I say small because that is not my ultimate job. I do have another job in the film business, but I do try to, obviously, I do spend a lot of time doing this, and it's just a learning process, as you will discover with your own journey. But for now, that is where we are at the moment. I mean, I wouldn't say I'm concerned. This is long value investment. This is what I'm looking for, and specifically excited about S&P Global. I think that is something that I would like to add to if it does fall back, if I get the opportunity. Now, I haven't got, I've put quite a bit of cash down at the moment. This is only a small account, between £5,000 and £7,000 account, so it's not a huge account. So we just have to wait and see where I'm going to sit on this for now. I have got a bit of spare cash to put in if I needed to. I may even add some more if I needed to. But for now, I'm going to sit on my hands because it is a volatile market. And we never know what is going to be around the corner. So a volatile market is good, but it has to be nevertheless a certain steadiness. The markets have lost over already 2 to 3% in the last month. So we are looking at a slight retraction now on the markets. It's been pretty red all week, and I'm not so sure if it's going to get any better at the moment. Just to recap on S&P Global really at this moment, I think the S&P Global, it really is down to obviously the interest rate. The interest will go up. If there's an interest cut, that would help for sure. But obviously that is, and the concern over the credit market as well. That's something that we need to look out for, the private equity there. So that's it. I think that's pretty much it for the week. I don't think I need to go any further really. I think the markets will probably finish as they are now, unless anything dramatic happens in the Middle East. Next week will probably be pretty much the same, and I am going to have a bow. I hope you all have a great weekend. I am off to play a bit of golf tomorrow. We are teed off for a nice golf and watch some golf. I know you guys will probably find that very boring, who doesn't like golf. And it's Mother's Day on Sunday even, I've been reminded, so probably a little bit of a family gathering. And I'm looking forward to hopefully the weather being good, which it is. I've had a bit of a back injury, so I've not played tennis neither. I am a complete sportsman apparently, especially at my age now. I'm getting old, but a few injuries here and there. My back still hurt after I pulled it a few weeks ago, but hopefully we'll be back next week playing as well. So yeah, looking forward to break in that respect and watch a few good movies. Nothing too special, nothing too strenuous, because this week has certainly been that. So I wish you all the best. I'm just going to double check that I'm not missing anything specifically. No, I think we're pretty much covered. The last Adobe analysis, please do check the last Adobe analysis and subscribe and like on that one. I do spend a lot of time trying to, kind of working out how things, that was my own thoughts more than anything else, because I think everybody else has done a pretty comprehensive analysis with other YouTubers. I'm here to give you more about my opinion, especially with Adobe, where I work in the similar industry as well, in the film business. So it is always, I feel quite passionate about that one. I do feel passionate about, my stocks I buy. And there will be a few more analyses next week, a little bit of an update on news. Please subscribe and like. Most importantly, I hope you all enjoy my show this week. I will be back on Monday with a recap in the morning, first thing in the morning. I think I'll go back to the morning show and then an evening show as well, and potentially a few, as I said, analysis on a few companies I might be looking at. I'm still very much interested in a few other stocks that I'm certainly tracking. Actually, interestingly, Microsoft is coming down under 400, so that could be a very attractive moment to buy into them. Anyway, it's Trader 72. It's over and out. Have a great week, guys, and a great weekend, and I will speak to you on the Monday. Thank you. Take care.